Ladies and gentlemen, I'm delighted to introduce you to our first campfire session today, Social Trading for the Era of Social Media. Please welcome Mike Reed, Director of Pelican Exchange.
Hello, everybody, and welcome to the campfire session. Wonderful for you guys to make it on day 2 of the conference. We will try and make it as interesting and as informative as possible. Just a bit of background on me. I'm one of the founders of a company called Pelican. I think to date we were probably the first people ever to get an FCA license for copy trading, specifically in the UK. And we provide white label solutions for people like IC Markets, for example, to take our technology and then try and compete with the likes of eToro. So that's my background. I'm going to let each one of the panelists introduce themselves and then and take them through, their relationship with copy trading and social trading.
Sure. Thank you, Mike. My name is Salim Sebbata. I'm the CEO of Bucks Financial Services in the UK, and I run the global CFD business for the firm called Stryk. I've been in the industry for 30 years, 31 years actually. Started out as a futures broker, then stockbroker, then private banker, and I think that's where my connection with the copy and the strategy trading comes in as well. And been in the e-broking space since 2004, running E-Trade in the UK, E-Trade in the Middle East, setting up a few 2 or 3 letter brokers in the Middle East, and I've been back for 2 years in the UK, and now I run the regulated broker in the UK and in Cyprus for the Bucks Group. Pleasure to be here.
Great, thank you very much. Likewise. And Tajinder, over to you.
I'm the co-founder and CEO of Finvisha Group. We are pretty much, I would say, across the world. We are licensed in Australia, India, Mauritius, Europe, US, and things like that. By and large, we are pretty much in a lot of things into financial services, which is CFD, listed products, payments, and cryptos. We have our own crypto exchange as well, and basically investing, saving, spending, and lending. Those are the main areas that we focus on. And with copy trading, ZuluTrade is one of the entities owned by Finvisha Group, and that is how I'm related to copy trading.
Thank you very much. And Anton, last but not least.
Yeah, thank you for the introduction. My name is Anton. I'm marketing manager at Brokeree Solutions. We are a turnkey technology company for multi-asset brokerages. So our flagship products would be social trading, PAM, liquidity breach. We do all the suite of products for risk management, etc. But the flagship products are social trading, which has been on the market from, I think, 14. For quite a bit years now. Yeah.
Sounds about right, yeah. So, I mean, what I want you guys to sort of envisage is that if you go back a few years now, a broker would launch themselves, they'd probably take an off-the-shelf form of technology, predominantly probably Meta and MT4, now an MT5 platform, and they would put the system in place. And then they would probably have to start to think about ancillary functions. So straight away, it was okay to have a pure execution service. And then everyone said, well, you can't really have one of those because you need a charting package. And that became the norm. You couldn't really operate unless your brokerage had a charting package. And now what we've seen in the last 4 or 5 years is that you also must have a copy trading solution. Now, copy trading comes in lots of different forms. A lot of these C traders and actually the metas have an inbuilt system. You've also got MAMs and PAMs. But it's not quite as straightforward as going, here's a bit of technology. It's just we're going to launch this and just see how it goes. There are lots of things you've got to consider to make sure it works well. And what you must remember is that when you go to win a client and the client's plugged in, copy trading is really designed to turbocharge the amount of flow you're getting from them in a positive way. And that's, hopefully you're doing it in the right way. There are obviously negatives to it, and you've got to avoid those pitfalls. But my first question I'm going to put over to Anton. I'm just going to, obviously as a provider of this technology, do you have responsibility about the functionality of it if things go down, if things go wrong, and who is liable for it? Because obviously if you take an outsourced bit of technology and you suddenly get a complaint, and we all have to live by complaints, when does the tech provider step in, and when actually is it the broker's responsibility?
Yeah, thank you for the question. It's actually a very interesting one. Since we're a technology provider, besides all of you have your platforms, right? From our side, we do not host the technology. We just give it to the brokerages, and brokerages work with that. So for us, I think the line lies strictly from the point of view, the brokerages, they know the clients, they work with clients. And when we speak about social trading, the majority of the traction comes to the list of providers, right? The available providers. And that's where the brokers have to be very nitpicky and understand, because of course you can let every trader be a technology provider. Oh, I'm sorry, signal provider, right? But it may lead to disaster just because not everybody is well.
So the broker has to have an input on looking at the quality of the content going through. Otherwise, and they're going to be, you think that responsibility should really fall on them to keep an eye on it at all times?
I would say so, yes. We as technology provider, of course, can enable that process in certain ways, but it all starts with KYC process, how you know your clients. Do you actually trust them to trust your other clients' monies, right? And from technology side, we do focus on this solution to be robust, to be very high in terms of performance, but enable traders with risk management features, etc. So all of that features should be done by us. But when it comes to the actual risks of people,
the content itself,
that's
on there.
That should be on the brokerage, I would say, yes.
That makes sense. I mean, I'm just going to sort of try and imagine this. So imagine if you're a broker, you're launching tomorrow, you've approached Meta, and you said, right, I want a license, thanks for coming. Now I'm going to look for a social system because I want my own. I'm going to start with you, Salim. What would be the key things, the key criteria you should be looking from a copy trading platform that you must have, and what are the things which are nice to have, you don't necessarily need, but hey, it gives you a little bit of a kick?
So I think, in principle, every trader wants to be profitable over the medium to long term. So he comes to the market as a beginner, which is a bit of Stryk's segment, kind of incubating the new generation of traders, and says, right, okay, there's a platform which, for most providers, you mentioned Meta, looks pretty daunting, an empty quote board, lots of charting, lots of features. They don't know what to do with it. And then what's the next step? So it's probably a TikTok search, a YouTube search, trying to find, okay, how can I become a profitable trader? And usually that's when the social and copy element comes in, either via an influencer or via something a bit more structured. So I guess where we're here to discuss is a bit more the structure around helping those users get the correct benefits and get the correct outcomes of using these social trading platforms. So I would say, if I look at, I know we'll cover regulatory a bit later, but if we look at the global landscape, probably the US is quite interesting as a regime where there's a minimum users that you're allowed to have as a friends and family account, and then it becomes quite regulated, quite formal with licensing, capital down, etc. So here, I guess what we're trying to do in social trading is copy a global best practice model and say, right, what type of data does the user need to see in an easy, digestible form? In my view, there has to be 100% clarity on the AUM managed by the different strategies, and also the makeup of that AUM. So it can't be, say, 100,000 pool of funds that is managed, and then there's one account that makes up 90% of the pool. So I think just followers, and that's where I'm struggling a bit with the social element, is probably not enough. It has to be a quantifiable, demonstratable AUM. Variety of strategies. Usually you'll see there's a lot of probably models that look fantastic because they've been backfitted for many years, and then when they start to aggregate more funds, the strategies diverge or market sentiment changes, and those returns are no longer achievable. So I'm saying sustainability of that alpha that is generated by the individual strategy is really important, and there, in my opinion, there has to be traditional quantitative filters on top of how the strategy trades for proper analytics. Then mixing of individual strategies to make up a proper pool of strategies. So not only buying last year's top return strategy, but also saying, right, what is in a more volatile market environment as we are in now, when things change, different groups become attractive. So be it commodities, be it commodity futures, currencies, maybe stock indices. So that element has to be there, and the education for the client as well, to be able to make a proper choice instead of saying, hey, I'm behaving like a typical private client, buying last year's hotshot fund, and things will be great. And in reality, we all know corrections happen also inside strategies. So I think that's really important. And then the nice to have, in my view, would be then aggressive alerting when things are going wrong. So not only drawdowns, but also the metrics inside individual or mixed strategy change, then the user has to be alerted. A bit more technical probably is how do the followers get into the strategies? Is it a one-shot direct investment? Are you just buying the full strategy immediately, or are you waiting for new transactions to appear? So I think that the different choice of getting in and out of strategies are important. And as the regulators are all watching us in a high-risk product, in my view, there has to be a choice of increasing and decreasing leverage, mainly decreasing as well.
Okay. Thank you very much. So that's really interesting. So from a client looking at the social system, what are those nice features to have? That was really useful. Tajinder, if I move on to you, and you're looking at it from the broker looking out, best practices. Obviously, the key criteria are technology, regulation. You then got the signals, that's the content, and then obviously the end client that's got to benefit from it all. Could you go through the best practices any copy trading operator should have to make sure that they are feeling responsible for all those different constituent parts and making sure it operates well?
So I think when we look at copy trading, for example, I look at it from a lot of different angles, because I've been a portfolio manager myself, managed multi-billion dollar funds in the past, before we started from Asia. I see, to some extent, we are trying to take potato and try to make tomato puree out of it. I mean, it doesn't work like that. They sound similar, but they're not similar. Financial services is the only industry that I have seen in the world where the raw material and the end product is the same. You take money as a raw material and you give end product as money. What we are doing as an industry, we are trying to increase that raw material enough so the brokers can make money, the clients can make money, the signal providers can make money, and it becomes a healthy ecosystem. However, inherently, if we expect, let's say, for example, clients to understand and know when to exit a strategy, let's say, for example, or to basically understand whether a strategy is back-fitting or forward-fitting, what's the Sharpe ratio, things like that, it's almost like we're expecting the client to pick up the stock himself. It doesn't solve a purpose. The reason copy trading, I believe, is picking up so swiftly over the last few years is because everything is going social, everything is going decentralized, peer-to-peer, and that's creating more and more interest. eToro, his $300 million into marketing copy trading has gone a long way. So I think when brokers are looking at social trading, to put it as a social trading platform, they need to start thinking about social trading as a social tool, which basically has to go beyond just the scope of, let's say, Forex, high leverage products, go into the products that are going to be, more value driven long term. If the product of copy trading or the result of copy trading is not long term value creation, it's just going to be another game in the financial or investec sector. And what I hear from a lot of regulators that I speak to directly, they are going to start coming very heavily against gamification in investec.
There was an announcement, wasn't there, by the FCA? FCA put out an announcement, I think, is it yesterday? Yes, so hot off the press, that they are going to be quite tight on gamification. So they are just conscious. I think you could see what's happening with binary about 4 or 5 years ago. Actually, it might have been 2 or 3 years ago. And obviously, they've jumped on that with gamification too. They just want that item. You've got to be really careful, haven't you, with any kind of product, badges, things like that. And actually, if you can offer that, how do you offer that? Or do you have to outright stop it?
So essentially, when you're putting copy trading in the mix, by and large, what you're trying to do is you're trying to create an ecosystem of providers, copy trading is a very vast spectrum when you look at the providers. There are technology providers, like Brokeree, for example, who are purely technology provider. There are people like eToro or some other guys who say that we give you amazing platform with followers, but you can use only us as a broker. Then there are platform providers like Meta, for example, that says, well, you can have any broker who's on Meta, but has to be on our platform. Zulu is, it's the odd man out that says we are broker neutral, we are platform independent, we are independent in a lot of respect. Just come plug and play, and that's I think where we have to make sure that the social element and the trust stays in place for the long-term benefits of the brokers as well as the clients who are putting their money on it.
Okay, that makes sense. It's interesting, isn't it? I mean, and I was going to, Salim, I don't know if you wanted to add to you wanted to add.
I just want to add, because our app is really geared towards millennials, beginners, etc. So we've taken an active stance to simplify the product as much as possible, to say, right, it's an app only, it's a simple, not even quote board, it's just what's been discussed on individual instruments, and then there's channel with experienced traders that explain to the rookies how things work to a certain extent. So for us, there's not so much a copy trading element in there. It's literally, there is a way to see who has what type of positions on, and then there's an ability to kind of actively, not passively copy.
There was an element of gaming at the very beginning.
Yes.
Right, we went right at the back at the beginning of Bucks, but you've obviously reduced that.
We've reduced that, but I think the idea is not, we are not, you have to go back to the origin of Stryk or the genesis of it, or Bucks X at the time. It was really the way to get people into investing. So there was a heavy equity slant to the app as well, not an aggressive trading and lots of bells and whistles. It's just to saying, okay, that was in 2014, it was obviously way easier to build a CFD app than a stockbroking app. So Bucks has then evolved into building also a stock trading app called Bucks Zero. But on the CFD side, it's still as simple as possible as a trading app. And then I guess the gamification element is there, but there is no hard incentive to come back to trade more and more. And also we see that the leverage is way less than for other firms by the client base.
Antonio?
Yeah, sure. I just wanted to add up on the gamification part of things. From my point of view, right, as a marketer myself, gamification has been just used a bit in the wrong place, maybe, in the social trading app.
Yeah, go on.
Because, of course, social part already enables some kind of gamification, just because you're in direct communication with the people and in the community. But if we take the gamification aspects and apply it in the right way, for example, education part of the social trading, just allowing people to learn about the features on the app through gamification by endorsing some of that. Not by endorsing their financial decisions, but by endorsing the activities on the platform. That will allow brokerages to gain better expertise among the clients, right, proficiency, and then allow them to get into that. If we speak about the other part, it would be simplification, and that's the other part, right? We should have our UIs and UX on point. It should be simple, it should be convenient, it should be easy to approach. And then through gamification, we teach people how to use it.
Yeah, it's really interesting, isn't it? And you can see, I mean, from the announcement yesterday that, we've all got to keep our wits about us as providers to brokers or integrated solutions for brokers. That, it's a changing landscape. The FCA, yes, it's a small regulatory body in the global market, but it has enormous sort of weight. So we then have to adjust the products that we offer the brokers that are going to market into the UK, because suddenly if we've got badges or games or whatever it is, that's got to be pulled. Just sticking on that point, I'm going to stick with you, Salim. So, the brokers that I deal with, and I think we all deal with, or even the integrated solution, are global players. And that means they've got to work in the UK, Europe, ASICS Australia, Japan. How do we see these regulators, shaping the way that copy trading is going? And can you see some kind of presence from those areas that we're all interested in pushing into, the Asian markets, Thailand, Malaysia, Cambodia? Can you see their regulators popping up and going, actually, we also think we're going to regulate this too, and you've got to get a license? So it's not just as straightforward as going, I've got the tech. You actually need to have some form of regulation as well. or in everywhere. Do you see that happening?
Ultimately, we're looking at a quasi-asset management solution. So the oldest regulators that have been around see it as such, and broadly everybody is adjusting. I think there's certainly a disconnect between FCA, Europe, ASIC, Japan, etc., where it's highly regulated, and then when you go to frontier and emerging markets, probably you can, quote, get away with a bit more flexibility. And also I see that some of these markets, say in the Middle East and in Africa, are heavily driven by introducers. So the compliance aspect comes back to the provider, even though there is no firm regime around copy trading versus asset management versus distribution. I think the regulatory burden comes back to the provider to say, hang on, these seem to be introducers that claim to be portfolio managers, asset managers, but they cannot demonstrate a profitable track record, a sustainable profitable track record. So then it's great to have a solution around that filters this performance, and then allows the broker to say, hang on, this seems to be okay, this is no longer okay. That's my view at the moment. But I think overall the regulators are looking at CFD as a high-risk product. So then we're throwing in gamification, all kinds of marketing incentives, most of which are gone. And I see the trend further sharpening to try and move the flow back to the exchanges, since the exchanges have, quote, lost on those transactions in the last 20, 25 years. So that's the regulatory picture globally.
Thank you. I mean, what I'm going to do, we have limited time left, but Tajinder, I'm just going to leave not the ultimate, the penultimate question with you. So I want you to imagine yourself, you're a medium-sized broker with a 5-year plan. What do you do? Which, if you're going to get a copy trading solution, which are the interfaces that you focus on? Is it mobile first? What are the generation target market you're going to go after? Which would be a really good geography you think is untapped that you would really push into? How would you really utilize, the limited budget that you've got to really make the most out of your solution?
Okay, first of all, if you're starting a new broker, with a 5-year plan, I would say go for ZuluTrade. That's the best platform out there. But on a serious note, I think if you're starting up a brokerage, you want to look at a 5 or 10-year plan and look at how you can have a stability in the market, which is like overly crowded right now. You have to think about community. You have to think about people who trust you, and they basically look at you from education, that you're educating them. Your interests are aligned, so you're looking at solutions which are basically going to help them by reducing. The way I see brokerage as an industry, and Finvicia revolutionized zero commission ecosystem. We literally, busted, a lot of. We made a very big impact with zero commission, and now I see a lot of brokers following that, because inherently brokers were built to make money when there is more transaction, because there's commission to it. Mathematically, I know, and we all know, every trade has a 50% chances of making money. The more you transact, your cumulative probability of making money is going to go down. Back-to-back 2 trades, 25%. Back-to-back 3 trades, 12.5%. Back-to-back 4 trades, 8.25%. Add friction to it, add all of those things to it, and the client starts losing a lot more the more he transacts. So broker has to start moving away from looking at commissions and volume, and more focus on community building, more focus on educating the user, building a long-term community that's built on trust, that's built on creation of value, because money in, money out has to increase. So those are the things that broker has to focus on. And if he's looking at copy trading as a solution, he should be looking at a copy trading solution that has a large part of social element to it. That is where people interact with each other and they become community. Why is Twitter picking up so big? Look at, for example, Google. You go to Google to try and search for what you want. Then you go to Google as a company to try and sell what you have. It becomes a platform where people come, they buy, and they sell. That's just like a broker. So make a platform that creates value, brings people together, make a platform, and the value will create by its own. And that is how I think the long-term sustainability would come, instead of trying to find out how best can I increase my volume.
Interesting. Okay, it's more of a holistic view and kind of a civic view as well. I'm going to give each one of the panelists and then I'm going to ask them to do one one piece of really valuable, a pearl of wisdom that they're going to give you that you should take out when you're, if you're going to launch your own copy trading system or take one off the shelf. So you, Anton, what's the one key piece of advice you would give someone, who is managing or launching a copy trading solution?
Managing or launching. Community and enabling your customers to be able to work with the applications you provide. Not just getting the technology and just leaving it as is, right? Work with it, customize it.
Evolve it, really push it, really embed
integrate it into your brand. Yeah. So you can have consistent brand value, brand proposition around it.
Totally agree.
I think for copy trading, it has to be something, it has to start behaving like a platform where, everything is open. Any platform, any broker, any a leader, any content creator, they should all be able to come and exchange their values and information and thoughts over there instead of, any specific element to it.
Okay, nice. And Salim?
I would say look at the way institutional hedge funds behave and try to build a fintech version of that via an ecosystem. So take the best practice from the large players that are mixing and matching algo or kind of manual or macro strategies and deliver that in an easy, digestible and selectable way to your community.
Yeah, I suppose because we know that those hedge funds and those big funds have been doing this for a long time. They've been beaten up many times over, and they have now a very refined product, which is obviously what you want to emulate. I mean, certainly from my personal experience, I would always say that make sure you get comprehensive buy-in across the whole team. So whether it's your sales team, your digital team, your executive stakeholders, your operations team, they've all got to understand how the product works, and they've all got to try and understand how to fix it, work with it, market it, and also measure it all the time. Measure it. Is it doing what you want it to do? Why is it not? Are the volume of trades the right quality of trades? Is there some toxic flow in there? But you've got to get every single person within the team across all the different departments to buy into it. If it's just a sales tool, with limited exposure to the rest of the company, it will be left in the corner there. But as soon as you have everyone pushing it and putting it front of center, like Anton said, then that's when you see this really big spike in efficiency. And obviously we know historically eToro have done a very good job of having the full. I mean, it's fully blended in their system, and they've got extraordinary numbers. But yeah, certainly internally as well, making sure everybody is on board. I think there's only 2 minutes left, but I think if you wanted to, if someone has any questions, there is time for 1 or 2 questions if anyone's got any. Oh, sorry, Jenna.
Someone in the audience was raising a hand.
All right.
Please.
Should I stand up?
Nah.
If you want, up to you.
Hi, my name is Mihai. I'm from Brokeree. Where do you guys see the integration with EAs and copy trading, and is there a direction to take that in?
Good question. Obviously, if people aren't familiar with EAs, most of you probably would be. That's the algos, that's the robots that actually get put on top of the actual trading experience themselves. If everyone wants to jump in, certainly my view is that EAs obviously trade as an algo, so they will naturally trade in much higher volumes. That is obviously to the benefit of the broker, but that also does lead your open self up for those ones which are sort of very aggressive and can put some toxic flow in. So I would say, yes, you leave it open to them, but you've got to keep your eyes and your wits about you, because if suddenly you've got 1,000 trades going through a day on a signal and they've got 500 copiers, it's going to get quite heavy for your dealing desk, and they're going to be quite angry with whoever that is if they don't like the flow. But I don't know, Tajinder.
I think one of the from Finvicia, when we look at it, and Finvicia has always been about changing the way things are happening. With EAs, we see the same thing. There is a very inherent problem with EAs. It is not platform agnostic. That has to change. EAs have to have cross-platform portability. EAs could be based on fundamental, information, could be based on technicals, could be based on, like what you said, these all grid EAs would bring in thousands of trades in a second and create problems for brokers and networks and things like that. But it could also be used, in a wide spectrum to benefit, for example, if there is PE ratio drops in a certain stock, you buy it, and you stop looking at your portfolio on a day-to-day basis. It has a lot of value because it takes the emotions out, but the problem is it has to be platform agnostic. Which is something we are working towards as Finvicia, and I think that would make it much more widely acceptable. It's not a Meta EA or C-Trader EA or ABC EA. It's just like Zulu. It's a global EA.
Thank you. Probably one more question. Let's any more questions? Or we're out of time. All right, well, thank you very much, everybody, for coming along. Can I have a round of applause for the wonderful panel?